Welcome to Option Trades Today. I'm Tony the Baptiste and I have a trade idea for you today, May 28th, 2024. But first, as we always do, let's take a look at what the market's doing. E-mini S&Ps, well, they're up 4. NASDAQ up 53. Russell up 6. A bucker in the clubhouse is the Dow down 136. And volatility for the first time turning green when the market mostly higher. Interesting, a little bit to me. Do I think that means that the market, has a potential to sell off here? Well, I've been thinking of that for some time now, so I'm not going to put too much weight into it today. Bonds down 16 ticks. IV rank is pretty good in bonds. No, it's horrible. 1.1. If you look at TLT, you would see it has the same IV rank of 1.1. Bond trade from a premium selling standpoint is a non-event to me. Oil up $1.85, IV rank of 20, kind of put that out of reach also for me because I wanted a little bit higher of an IV rank. But you're going to be surprised at the stock I went to today. I went to a stock that I said I wasn't going to trade because of all the binary risk in here, but it's Boeing. Boeing sounds like boring. Boeing up 55. It's up 61 cents, but the IV rank is 55. If you look here on an IVX 5-day change, you'll notice that the volatility really isn't up over the last 5 days. It's basically unchanged here at down 0.9%, less than 1%. But the IV rank of 55 is compelling to me. And when I look at it from a chart basis, you can see here that it has been expanding quite nicely over the last 5 days, with the stock really not going anywhere. So for that reason, I looked at a trade that has a little bit of bullish delta to it. The stock today had traded higher. It traded all the way up to, I believe, around 178 and change or so. I'm going to go to July with 52 days. June with 24 days is just too close to that 21-day threshold, which is going to be this weekend, this Friday. We're going to look to roll any positions we have from June, take them into July. So all new trades for me will be in July. So I'm going to look to sell some premium. You'll notice here I wanted to put this volume up here. I never usually look that much at volume, but I wanted to see that there was enough volume in here because the markets can be a little bit wide in here. So you have to watch on your price discovery here. Go in a little bit above the market so that when you place a trade, as opposed to putting it right in at mid-price. So I'm going to take the stance that there's still some bad news going to come out in Boeing, but man, how much more can they hit with this? I want to lean a little bit long, but omnidirectional. I don't want to do a 1/2 ratio spread on the put side because I don't want the extra units there. So I'm going to go a little further out of the money by doing a Jade Lizard. I'm going to sell the 85.90 call spread. That's trading for around $1.40. You could make a good case for selling the 80.85 because it's closer to 1/3 the width of the strikes. I went with the higher probability of success and less credit. I went with the 85.90 because when I couple that with the 65 put, I'm able to do it all for over $5. I actually got filled at less than this when the stock was higher by about 30-40 cents. I got filled at $5.11. So if you're watching this, you could probably do the trade better than me. You could also go down to the 80.85 and collect more credit. If you try to move your strike down to the 60, you'll notice that you won't get more than $5. Why do you want to have more than $5? Well, if you get more than $5 in credit, you'll have no risk to the upside. This green line will go up into perpetuity. This is a high probability trade with a 76% pop. It does have a positive theta decay of $7.34. It is a little bit long. I told you I wanted to go omnidirectional with a little bit of long delta. That fits my assumption. There is 21 long deltas. My max profit is obviously the credit that you sell it for. Presently it's $5.22. I sold it for $5.11. So you can do better than me when the stock was up around 60 or 70 cents. Your break even to the downside is going to be the short strike that you have. That's the 165 put, plus the $5 and change in credit, which brings you down to a break even of around 160. Now, The stock can stay in between here, and you would make that $5.11, but it is 52 days away. Boeing does have a $14 expected move, which brings us right down to our break even, which gives us that probably profit that's just above a standard deviation at 76%. What's a good way to defend this trade? Well, since you're already using the buying power of almost $2,400 in a margin account on this trade, you could certainly, and you'll notice, I'm just going to move this down, move down the call, making it a $10 wide spread, and you're still using the same or less buying power when you do that. Now, why do I look to defend a trade in this way by just moving that one short strike down, therefore changing the whole spread? Let's just say, for argument's sake, I was only able to get $1 for this roll down. I had probably a profit that was 76% when I collected more than the width of the strikes. When I move this down and my whole trade, now I've sold it for $6.11 instead of $5.11. I'm just extrapolating out and saying I can sell this 80-85 call spread with the stock lower couple of days from now, a week from now, 2 weeks from now, for less money, for $1. I'm not going to be able to sell it for the almost $2 that it's trading for. I can only sell it for $1. My total spread is going to be $6.11 on this trade. That would be a way for me to reduce my delta. Let's just assume that, for argument's sakes, that you could pick up 8 or 9 deltas by rolling now. Maybe you could pick up 4 or 5 deltas by rolling down one strike. Or if I had to, I would roll down 2 strikes on this trade. Therefore, changing the whole trade, definitely having risk to the upside, but again, I'm worried about the downside. Why am I not talking about what I would do if the stock goes higher? How would I reduce my delta there? Well, I want the stock to go higher because I have no risk to the upside. The only thing I'm worried about in Boeing is to the downside. So I'm selling the 165 put. I'm also selling the 185 190 call spread. I looked at selling a straddle or a strangle in here also, but I already have those type of positions. I like to keep my overall portfolio delta kind of strategy kind of neutral, meaning I like to mix it up so that my probability of success on all of my trades has a full portfolio beta weighted pop of over 65%. All right, I'm Tony Batista, right here from the Batcave in Chicago. I appreciate your time. I do want to go on record here and say that this is one of my least favorite trades I've put on. Not the Jade Lizard. I love the Jade Lizard. But in Boeing, I feel the least confident about this trade, which you know what that means. Well, this is going to be a home run winner for sure then. But you know what I need you to do? I need you to open move, transfer your account to Tasty Trade, bring it over. I think you can get up to $4,000, maybe even $5,000, depending on how big your account is. Open move, transfer your account, help us keep the lights on here.